Hello, good morning, ladies and gentlemen. How are we all doing today? Hello, good morning, ladies and gentlemen. I hope we are prepared and ready for the New York session today, and trust you are doing well out there. Let's confirm that we are good to go this morning. I can see quite a lot of comments in the comment section, so I would appreciate that we confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly, please type in hi in the comment section so that we can get this started. I would like to see some feedback, please. I want to see some response. Let's confirm that we are good to go this morning. Okay, let's see. Okay. Ezabdi Abdullah, good morning to you. Thank you. 663 BKDMC, good morning. 8603, good morning to you too. Jack Rasentis, good morning. How are you doing today? HST, I see your comments. Dino, good morning. 8132, good morning to you. Hey Carrie, good morning. How are you doing, Carrie? Glad to have you around. 54101, thank you very much. 88505, thank you. Happy 2652, I see your comment. Thank you very much. I'm very fine here and trust you are doing well over there. All right, so I think with this handful of comments, I will see this as a positive confirmation that we are good to go this morning. On this note, I want to welcome you all to yet another edition of the Extreme Speed Live. And I promise that we are going to be having an exciting and at the same time insightful analytical session as we dive into the financial market. Well, my name is Sharif Daramola, and for the next 1 hour, I'm going to be your host as we review and also strategically position ourselves ahead of the New York session today. Well, for the first timers who are joining us for the first time, you're highly welcome on board. I'm always excited to have new faces around. If you are new, let me know in the comment section by typing new in the comment section, and this will make me know and we shall celebrate you guys. So what we simply do here on a daily basis is to come together as a community, gathering in anticipation of the New York trading sessions, and during this time we will be reviewing and manage our current position while we also aim to position ourselves strategically for today's trading session. And we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And it might look a little bit overwhelming at first, as it is normal that whenever you expose yourself to a new experience, you need some time to acclimatize. Of course, with time, you will get to understand how this works. So I advise that you stay tuned in, be with us through to the end of the session, and join us on the subsequent session on a daily basis. And with time, you will eventually be able to use the information you have gathered here to make your independent decision on your own portfolio. So welcome once again, everyone. So without further ado, let's dive right into the business for today. And you know how we do it. The first thing we want to be doing is to keep tabs with the economic calendar, as these fundamental factors, as you all know, often manifest on the charts in technical patterns and price movements. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns. And this also helps us to position ourselves in such a way that we can catch any potential move prior, during, or even after these economic events. So with that being said, let's scale into the economic calendar, and in fact we have a couple of high impact events we are expecting from the US docket and this is going to be coming up in about an hour or two from now. So the first one for today, Tuesday, June 27th, is the durable goods order for the month of May. This index is always released by the U.S. Census Bureau, and it measures the cost of orders received by manufacturers for durable goods, which means goods planned to last for 3 years or more, such as motor vehicles and appliances. Well, this is a very, very sensitive data, as it gives us an insight or a background knowledge into the economic situation in the US, and a high reading is always seen as something very positive, whilst a low reading is seen as negative. So it gives us a very good insight into the contraction and if the US economy is contracting or expanding. And from the previous data we have here, we have 1.1% for the month of April. And we have a general consensus expecting that the data for this month will be -1%, which is on a little bit to the downside, hereby insinuating that there has been some contraction in the production sector. So we are going to be looking forward to what the actual data is going to be. Will it be as expected, below expectation, or even beyond expectation? Then simultaneously, we are going to be having the non-defense capital goods order, excluding aircraft. So this one also is released by the U.S. Census Bureau, and it measures the cost of orders received by manufacturers for capital goods. These are goods. Capital goods are durable goods used in the production of goods or services, which means goods planned to last for 3 years or more, excluding defense and aircraft sector. It's also a very sensitive data, which it gives us an insight into the economic situation of the US, and a high reading is always seen as bullish, while a low reading is seen as bearish for the US dollar. Now, the previous data came in here at 1.3%, and we have a general consensus projecting a 0% on this one, another projected contraction in that regard. So we are really going to be looking forward to what the actual data is, and we are also going to look at how the market will be anticipating this event, as this will help us to be able to position ourselves ahead of this economic event. So with that being said, here let's dive right into the business for today. And as usual, the first instrument we are going to be looking at is the USOILSPOT. And one thing you'll have observed in the last 24 hours is that the market has been very, very choppy, been in a range for quite a while before we begin to see some traction. So during our live session yesterday, what we saw here on the USOILSPOT 1 hour time frame, the first thing we observed on this chart was how price action was caught within a range following this bullish gap we noticed at the beginning of the week. Then we identified the channel where we saw where the $70 area was serving as the resistance line of that channel, and while the $69 area became the support line for this channel. And remember, yesterday we had a buy stop and sell stop order placed at both ends. We had some of this position taken out in a loss, and it was quite a very choppy scenario yesterday, and not until today we begin to see some huge traction. And for those who are taking advantage of this bearish opportunity here, well done to you for being on standby to catch that move. And remember, we had a key level here, had a $69.50 level, and you know how we use our key level in this community, as whenever price action is below that key level, we want to be looking out for selling opportunities. And this is exactly what happened. We saw the breakdown. If you are taking advantage of this, I shared this on my public platforms anyways, and we also had another opportunity, had the breakdown of the $69 level. So for those who are taking advantage of this opportunity, if you are taking it from the 69 area, you will currently be running with about 60 pips thereabout. And for those who took it from this level, you will currently be running with about 100 pips. So for those who have been profitable so far this week, well done to you for being on standby to have caught this opportunity. Now, the next thing we want to be doing, now you know how we do in this community, the next thing we want to be doing is to ensure that we secure this current position by moving all our stop losses. And personally, from the look of things right here, I'm of the opinion that we could still have some retracement at some point, so we want to be giving room for price action to breathe. And in that regard, I will be suggesting that anywhere between the $69.20 level and the $68.80 area seems most appropriate to have our stop loss placed, as this will give quite a lot of room for price action to breathe, while we also anticipate potential trend continuation to the downside. So with our positions well secured at this particular point in time, what is going to be our plans as we get prepared for the New York session? And for those who had missed out on this opportunity, what do we expect to see in this market that will make us continue to be part of this bearish move? Now, before I go into the details here, I would like us to scale up into the higher time frame. Let's quickly have an holistic perspective into what has been going on in this market and what we actually saw at the beginning of the week that made us to have this current setup we have here. Now, when you scale up into the 4 hours time frame, this was basically what we saw at the beginning of the week. So we saw how price action was ranging since the beginning of this month, just within the $73.50 level, which happened to be a very strong supply niche, as we saw how the zone had continued to reject buyers' attempts to break through that structure. Then we saw the support zone here, the demand zone, which falls around the $67.50 area, a very strong buying niche in this market, as we saw since the beginning of the month how sellers have found it very difficult to break through the structure at every point in time. And because of the situation here, we saw what happened here on Friday, a very sharp rejection of that level, giving us a hammer candle, hereby revealing the presence of buyers around that area. And at this point, we were saying here at the beginning of the week that we shall be looking out for buying opportunity if price action really does break out of our key level situated at the $69.50 level. So this is our key level for the week here, and this is what we said we are going to be using to guide our trading activity. So to be able to identify a potential opportunity at the beginning of the week, what we agreed here was to scale down into the lower time frame so that we can see how participants in the market will be reacting to that key level at the $69.50 level, and depending on what we see there will help us to position ourselves for any potential move at this point. And as a result of that, we finally saw price drop to the downside, giving us this bearish momentum that we witnessed on the 1 hour time frame. Now, the next question we are going to be asking at this particular point is, how far will this bearish momentum go? Now that we have continued selling pressure around the $69.50 level, will it get into the demand zone one more time to incite another wave of bullish momentum, or are we going to be seeing a situation where price will break through that demand zone to incite more opportunities to sell the US All Spot for today? So with this information we have gathered on the 4 hours time frame, I would like us to scale down into a much more lower time frame, and let's see how we can actually position ourselves ahead of the New York session today. But before I go into that detail, there is a simple level which I was able to spot here around the $68.20 level, which I want us to be using or to include into the structures we are going to be using to guide trading activities for today. So I want to label this one right here. So you want to mark this level out on your chart too as well. So we have the $68.20 level, and I will be sharing with you why I have chosen that level. So hold on a second. Let's label this, and we will be talking about that in a moment. Now, if you look at what has been happening along that $68.20 area since last week, Thursday, we saw how that level had continued to be a buying niche. So we saw multiple rejection rejecting the attempt by the sellers to break through that structure. Then we saw the same thing happen here on Friday's trading session to emphasize the strength of the buyers around that area. Now price action is doing a free fall at the moment, and it's gradually approaching that level, as you can see here. And in fact, in the last couple of minutes, I think in the last 30 minutes or so, we have been seeing some buy pressure around that area. Now, what we are going to be doing here is to try to see how the market will be reacting to this level to determine what our next line of action will be. So will price break through that structure to the downside? That is one question we want to be answering. Or are we going to have the same continued buy pressure above this level to incite another wave of bullish momentum? And if that is going to be the case, we might likely be seeing a situation where price could transition into something that looks like a reversal pattern in the form of a double bottom structure, where the neckline of that reversal pattern will fall at exactly the $70 area, where a breakout will confirm it and give us an opportunity to buy the US All Spot. So these are the things we are going to be looking at, but to have a better perspective into this, we shall be scaling down into a much more lower time frame. And in the case of this scenario, we shall be scaling down into the 1 hour time frame. So scaling down into the 1 hour time frame, we shall be having that $68.20 level as a point of reference for today. So marking that level out on your chart is very necessary, as we want to see how price will be reacting to that level. So let me zoom this in a little bit so that we can see things clearly. Okay. So now we have the situation running, and we have this impulsive move to the downside. The candle has already closed, so we are going to be taking this into consideration. And from a technical standpoint, whenever price action breaks down a key structure, so we had a structure here at the $69.50 level broken to the downside. We also had the $69 area broken also, and which is a level that price might likely come back to retest to incite another wave of bearish momentum. It could come back into the structure. So what we are going to be doing now is to see what is going to be going on around the $68.20 level. That is this area here. So will this buy pressure continue? If it does continues, at this point we shall consider it to be a retracement move because of that impulsive bearish leg, after which we are going to monitor how it's going to play out around that $69 area. So if it does come back again and price finds it difficult to break through the $68.20 level, then we shall be getting ready for a buying opportunity, as the appearance of a reversal pattern will be something we are looking forward to buy. And if we can buy, ensure that we move our stop losses accordingly to lock in profits as we continue to watch how price will be reacting with this level and the $69.50 level and that $70 area, which might turn out to be the neckline of that reversal pattern we saw on the higher time frame. So that is how we are going to be looking at this from this particular point in time. So for those who have a sell position, kindly move your stop losses, secure the current sell positions while we wait out and see how the market will be reacting to this current structure. However, if price action continues in such a way that it breaks down that $68.20 level, then we want to scale down into a lower time frame to look out for retest of structure, which will confirm that sellers are gradually gaining momentum. Then we could join that bearish move to the downside. And remember, we have a demand zone on the $67 area stroke the $67.50 level, where depending on how price action reacts to that area will be giving us an idea of what our next line of action will be. So if buy pressure resumes again, then we get ready to buy, and if price action breaks through, we get ready to sell. Our next line of action will be. So if buy pressure resumes again, then we get ready to buy, and if price action breaks through, we get ready to sell. So these are my views here on the US All Spot for today. If you have any questions regarding what I just talked about, feel free to let me know in the comment section. and you might want to screenshot my screen or mark these levels out on your chart so that you can use them as a reference point when you're about to make your independent decision on your account. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions while I read through the comment section. Okay, I can see okay, I saw 8505. I'm fine, glad, thank you. Trust you are doing well too. 70113. Good morning, 3974. Sergio, good morning. Susie MB, how are you? 24811, good morning to you. 1779, good morning, glad to have you around. Sergio, good morning. Susie MB. All right, so in the absence of no questions, I want to assume that we're on the same page here. So I will just move on to the next instrument on our watch list for the week, and that is the USTech 100. Now, on the USTech 100, we have had a very interesting situation here where price action had moved significantly to the downside and in fact fell through with our expectations on the USTech 100. And if you are taking advantage of that move, as you can see, price action had moved over 190 pips in our favor before we begin to see this whole consolidation phase go on around this area. And in fact, if you are able to maximize this move by adding more position at the breakdown of the 14,800, you saw how price moved over 100 pips before we saw this whole consolidation phase happen here. And for those who are taking advantage of this opportunity, well done to you for being on standby to catch this move. And if for those who still have a sell position running at this point, then it is necessary that you want to be moving your stop losses to secure this current sell position. And for the sake of giving room for price action to breathe here, I will be suggesting anywhere right above the second entry zone here as an area to have our stop losses, while we also give room for price action to breathe. So since the beginning of this week, we have been seeing okay, the first thing we saw here during the early hours of the trading session on Monday was this choppy situation where price action was caught within a range between the 14,945 level and the 14,890, and this was a flat channel we were supposed to use to guide our trading activity for the week. And you know how we use this whenever we identify this kind of simple setup. We want to wait patiently for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. So initially we had a sell position triggered here. I think this happened prior to our live session yesterday, and this was during our live session. We were around here during our live session where I was telling us that we are going to be looking out for selling opportunities below the structure to sell. And I said if we are going to be buying, then we want to see price action break out this descending trend line, which has been supporting the bearish momentum since last week Thursday, for us to start thinking of buying. Though we had the breakout happen, price came back but did not do the retest, but instead triggered our sell stop order below the 14,890 to incite a sell move to the downside. And for the fact that price still remains below the descending trend line, we'll have no other choice than to continue to look out for selling opportunities in this market. So for those who had missed out on this opportunity, the week is still very young. I still think the market will still do some retracement into structure, and then we wait out for structures to mature to give us an opportunity to join the trend continuation to the downside. And this is as long as price remains below that trend line. So for today's trading session, we already have a simple setup we are going to be using to guide our trading activity for today. and that is this descending trend line that you can see on your screen right now. So as long as price remains below this descending trend line, we shall feel comfortable in our sell position. So with the situation we have right now, following the impulsive move we noticed yesterday, you will notice that price action has currently been going through what looks like a consolidation phase, and it might lead into a retracement back into that trend line or the 14,800 level, which was broken yesterday to incite another opportunity to the downside. So what we are going to be doing here, for those who had missed out on this sell position we enjoyed in the last 24 hours, so you want to hold on and see if price action will come back into the zone. And if price action comes into that area that shares a confluence with the 14,800, we will scale down into our lower time frame, where we want to look out for reversal patterns, signs that sellers are gradually getting momentum. In fact, we want to see that signs that buyers are finding it difficult to climb back above that trend line, after which we want to be part of a bearish move to the downside. And for those who still have a sell position running, this would be another good time to add more position, hereby maximizing the potential of this bearish move. Now, to make things a little bit more easier for us today, we want to acknowledge the fact that since price action tested the lowest point here at the 14,650, or is it 14,700, we have been seeing something that looks like a higher low. So I would like to acknowledge that by marking those levels out, so that we can also use it as a yardstick to guide our trading activity for today. So the first thing I would do here is to acknowledge the lowest point price action has been. It's going to also be serving as a parameter to add more position if price action broke through that structure to the downside. So we have a figure here, a psychological level, 14,700 level. So we want to mark this level out on our chart. Then we want to bring out our line chart at this point and also connect the series of lower highs that we have been witnessing here. So we are still going to do some readjustments after we bring back our candle chart, but let's just mark this level out, and then we can now bring this in. So we have a trend line to work with now. Now, if price action does not go as far as coming back into the trend line, but instead drops below the trend line, then the retest of structure will be giving us an opportunity to sell. Then we could have a sell stop order below the 14,700 to maximize the potential of this bearish move to the downside. So that is how we are going to be selling the USTech100 today. So as long as price remain below that main trend line, that descending trend line I shared with you earlier, we have no other choice than to continue to look out for selling opportunities. But if at any point in time we witness a situation where price action breaches the trend line, that is, breaks out of the trend line to the upside, then at this point we shall be considering buying the USTech100. But remember, we are not going to be getting too excited at this point. This is still a very strong bearish trend, so it might turn out to be a false breakout of that trend line. So what we want to do here, as soon as price breaks out of that structure, is to scale down into, let's say, the 15 minutes time frame, where we want to look out for confirmations that buyers have come to stay. Now this would reflect on the chart as a retest of structure, that is price coming back to retest either the trend line, the 14,800, or even this bullish trend line here, where the appearance of buy pressure, which could reflect on the chart in the form of a reversal pattern like double bottom structures, head and shoulder patterns, then we can join that move to the upside. So the only way we can start considering buying the USTech100 today is to see a breakout of that descending trend line, after which we look out for structures that support opportunities to buy this option. So let's keep this in mind. Let's mark these levels out on our chart so that we can use them as reference points when we are about to make our independent decision today. And you can also screenshot my screen if you want to, for easier and quicker way to mark these levels out. So that is my view here on the US Tech 100. If you have any questions regarding what I just explained and you need further clarifications in that regard, well, feel free to let me know in the comment section. I'm here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions while I prepare the next slide for is it the GBPUSD we're going to be taking next? Okay, I can see 80081779. Good morning to you. Thank you for checking in on us here. All right. Okay, so in the absence of no questions, I'll see this as a confirmation that we are on the same page. So I will be moving on to the next instrument for today, which is going to be the GBPUSD. Yes, the GBPUSD. So on the GBPUSD, the market has been range bound in the last 24 hours here, and which further emphasized the level of indecision in this particular market. And at the beginning of the week, we initially saw this range to give us an insight into the level of indecision in this market, where we saw our price action was initially caught within the 1.27400 level and the 1.27100 area to give us a flat channel to work with at the beginning of the week. And you know how we do it whenever we have this kind of simple structures. We want to wait patiently for market to break out of that resistant line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, there's one thing I mentioned here during our live session yesterday. We already had a situation here. Okay, this was where we were during the live session yesterday. And if you remember vividly what I said here, I said for us to sell the GBPUSD, we would need a significant confirmation for us to be part of any bearish move at that point. And I told you that this is going to reflect on the chart in the form of a significant breakdown of structure, where a retest will be welcoming an opportunity to be part of a bearish move to the downside. And if this does not happen, we are not going to be considering selling. And the reason why I mentioned this yesterday was simply because of how strong the 1.2700 level has been, a very strong demand zone for participants in this market. Now, if you look at what has been happening in this area in the last couple of weeks, you'll see that sellers have been finding it difficult to break through the structure. We saw what happened here on the I think last week Wednesday. We saw what happened at this juncture. We also saw what happened during the last trading day of last week, where sellers tried as much as possible to break through that structure, but unfortunately it was negated by the buyers. Then the same thing also happened during the course of the week. During the first day of this week, we saw another buy pressure, and during the early hours of today, we saw how the price action moved significantly out of that area. So these are clear signs that this area is laced with a lot of buyers presence around that area. So it's very reasonable that we look out for buying opportunity as long as price remains above this area. And if we are going to be considering selling the GBPUSD for today or this week, I would rather want to see price action break through the 1.2700 level for me to join a decline to the downside. And if this does not happen, I will continue to maintain a bullish bias on the GBPUSD. Now let's zoom into what has been going on here in the last 12 hours or so, and look at what we have. Remember, on the 4 hours time frame, we had an ascending trend line which has been supporting the bullish momentum. Okay, for the sake of those who are not part of the live session yesterday, let's quickly run through that structure on the 4 hours time frame. Now, this is the 4 hours time frame here, and this is what we spotted at the beginning of the week. And the first thing you will observe from this current market structure is the fact that price action has been bullish. And to emphasize the strength of the buyers here, we connected the series of higher lows, giving us a couple of trend lines to work with. So we had the major trend line, which is the thick green line on your screen. And then we have the deviation from that one, which happens to be this other trend line where price action has been trading around in the last couple of days. Now, if we zoom in, you will see that price action had continued to reject that area as sellers are finding it difficult to break through that area, which further emphasized the strength of the buyers at this particular point in time. And coupled with the confluence with the 1.2700 level, which happens to be our key level, it is quite reasonable to look out for buying opportunity at this point in time. Now, to guide our trading activity today, we shall be scaling down into the 1 hour time frame. I just needed us to see what things are looking like from a higher perspective, so that when I start talking about the current structure on the lower time frame, you would be able to relate with me. Now, in addition to the structures we had here, remember we had a descending trend line which has been supporting this bearish momentum since the beginning of last week's trading session, as you can see here. And what we saw during the early hours of today is quite interesting. We saw how price action for the first time in the last 4 to 5 days break out of that trend line for the first time. And when price action breaks out of a key structure like this, the next thing we want to be looking out for is for price action to come back and retest it to confirm the strength of the buyers here. And from what has been going on here in the last 4 to 5 hours, price is back into that structure and we're beginning to see some buy pressure resume around this area, which is likely going to be inciting the second wave of the bullish momentum for this week. Now, what we want to be doing in this community is to ensure that we position ourselves in such a way that we can catch that move, as price could significantly move to the upside in that regard. So with this case scenario we have here, I already have a buy stop order above the 1.27500 level. As you can see here, a breakout of the zone would have taken out all the sell positions along this area to signal that buyers have come to stay in this particular market. Now, if you look at this structure closely, it's looking more like a reversal pattern as well. If we take into consideration this impulsive move to the downside, price comes back here. Price was unable to break the previous low. Price comes back into that neckline. Well, a breakout will definitely confirm that buyers are getting stronger. And if price action continues to climb to the upside, breaks out of the 1.27850, we definitely want to be adding more position to our existing trade. So this is how we are going to be buying the GBPUSD today. Then there is one more thing I would like to call our attention to here, and that is the 1.2740 area, which I'm of the opinion that we could place a buy stop order there too as well. If you can afford to have your stop loss somewhere around this area, which will be dovetailing to between 25 to 30 pips, if you can afford that, you can as well place a buy stop order above that area, and let's see how well we can maximize this bullish momentum that we are about to witness in the market today. So this is how we are going to be buying the GBPUSD today. And also note that we are anticipating the durable goods order data coming in about an hour or two from now. So let's wait for that one to let's put that into consideration too, as well as we continue to monitor price action. And I also stated here that I wouldn't be selling unless I see a significant breakdown of the zone here between the 1.27100 and the 1.2700 level. So that is the only way I can consider selling at this point. Anything outside this, I'm looking to buy the GBPUSD. If you have any questions, feel free to let me know in the comment section. You might want to mark the screen out right now, and so that you can use it as a reference point when you're about to make your independent decision. So I will be taking the next 10 to 15 seconds to see if there are any questions, and also give you time to mark out these levels on your chart. All right. So, in the absence of no questions, let's take this as a confirmation that we are good to go. So, I will be moving into the next instrument, which is the XAUUSD. Now, on the XAUUSD, we have a similar scenario which is peculiar with all of the US dollar pairs since the beginning of the week. Price action has been in the last 24 hours range bound, as you can see here. And this is giving us an insight into the level of indecision in this particular market. Remember, we have our key level at the 1,935 level, and we have the lowest point where price action has gotten to for this week at the 1,922. And one thing we have observed here since the beginning of the week is the fact that the support line appears to be a very strong one. As you can see, every attempt by the sellers to break through the structure has been met with strong resistance from the buyers. Look at what happened throughout yesterday. We saw that sellers tried as much as possible to break through that structure, but failed at every point in time, as we saw bullish traction spring out from that zone. The same thing is going on in the last couple of hours now. Price is back into that zone, and we want to see how price action will be reacting to that level. Now, one of my opinion about this current market structure is that the chances of a bearish momentum is looking very, very possible at this point. And why have I said this? Well, if you look at the highest point price action has been for this week, this is the highest point. That's around the $1,932.50 level, just right around here. And during the early hours of today, we saw how price has been finding it difficult to find a new high. So you can see this high here is yet to be broken. So we have a lower high, and from a technical standpoint, whenever we begin to see lower highs in a particular market structure, it is a clear sign that sellers are gradually gaining momentum. And as a result of this, I am considering that sellers might likely take over this market. Then in addition to that observation is this trend line we identified during our live session yesterday. If you remember vividly, we noticed this higher low since last week Friday, and which extended into the first day of this week here. So what we did yesterday was to acknowledge this higher lows by connecting it and using this trend line as a yardstick to guide our trading activity for the week. And you know how we use our trend lines in this community. As long as price action remains above the trend line, we want to feel comfortable in a buy position. But unfortunately for buyers yesterday, we saw how price action broke down this trend line a couple of hours into the New York session, and in fact followed technical expectations in that regard. As you can see, breakdown. We saw price action come back to retest the structure, and since yesterday, price action remained below both the trend line and the $1,928.50 level. So at this point, based on these two features in this market structure, I'm of the opinion that price action is likely going to be going to the downside. So in that regard, we want to be having an opportunity to sell right below the 1,922. As a breakdown of this zone here for the first time this week will be a signal that finally sellers have found the momentum to break through that structure to incite another wave of bearish momentum to the downside. And if price action continues in such a way that it does break down the 1,910 level, retest it on our lower time frame, we definitely want to be adding more position to our existing trade. So this is how we are going to be selling the XAUUSD for today. So you want to be maxing this level out on your chart, and let's see how price action will play out from this area. Now, it is our culture in this community that we always try to keep our options as dynamic as possible. We are working in an environment which is very, very fluid, and for us to be profitable in the financial market, we also want to be as open as possible. So in as much as we are looking out for selling opportunities in this particular market, we cannot ignore the potentials of buyers too as well. And if you even consider what has been going on since Friday, remember we have been seeing some higher lows which gave us this bullish trend line, where the breakdown of this trend line that happened yesterday could actually turn out to be a false breakdown. And if this happens, we might likely see a situation where price will climb to the upside. So while we hold on to a bearish bias here, what is it that could happen on this chart that will make us change our idea from bearish to bullish? Well, personally for me, I would rather want to see price action take out my key level at the 1935 area for us to start considering buying. And if you look at what has been going on around that 1935 since last week's trading session, you will see how that level has been a major determinant of selling opportunities in this market. Look at what happened here on Tuesday. We saw what happened here on Wednesday. We saw selling pressure around that area. We also saw what happened here. Okay, this was Wednesday too as well. And last week, Friday, we saw what happened with a sharp rejection. And since that moment, price is yet to break out of that area, which is the reason why we are holding on to a bearish bias. But if a breakout of the 1935 level happens, then price action would have taken out all the sell positions around that area to give us a confirmation that buyers have come to stay. But one thing for sure we are going to be looking out for is for confirmations to give us the confidence to join this move, which will obviously reflect on the chart as a retest of structure to give us an opportunity to join the bullish momentum to the upside. So without this, we are not going to be buying. For me personally, without this, I'm not going to be considering buying at this point, unless structures give me something new below that level to consider buying, and that could be something like higher highs and higher lows from the structure. I begin to see a breakout of the 1928, then higher lows, higher highs, then I could now start considering buying before even the breakout of the 1935 level happens. So let's keep this in mind. Let's mark these levels out on our chart. You can as well screenshot my screen so that you can use it as a reference point when you're about to make your independent decision on this account, on your account. So these are my views here on the XAUUSD for today. So I hope that I made myself very clear. If you have any questions whatsoever, or you need me to make clarification to an aspect in my illustration so far, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will hold on and take some 10 to 15 seconds off to read through the chart and see if there are any comments, while I also give you time to mark out these levels on the chart before moving into the last instrument for the week. All right, so in the absence of no question, okay, I can see your comment, Kami Owan. Good morning. Thank you for checking in on us here. 596, good morning to you. Thank you. All right, so in the absence of no questions, I want to assume that we're on the same page. So we shall be moving into the last instrument for today, which happens to be the USDJPY. Okay, I can see 3768 says he just joined and haven't received. Okay, I will suggest you contact the contact center. Contact the contact center to they will help you resolve that issue. All right. All right. So moving into the last instrument that is on our watch list for the week, and that is the USDJPY, as you can see on your screen. Oh, sorry. And on the USDJPY, we have quite an interesting setup on this chart since the beginning of the week. And just like what we witnessed during the course of last week's trading session, we can see here that price action has been range bound, just peculiar with other USD pairs that we have been looking at. And one interesting thing about the structure is how price has been ranging between the 143.750 and the 143.250 since the beginning of this week. Though we had a breakdown here during our live session yesterday, we already had this breakdown happened, and I told us all that if price does come back to retest the structure with continued selling pressure on our lower time frame around that area, then we might likely be considering buying, selling. But for the fact that we saw sharp rejections here, it's a clear sign that buyers are gradually gaining momentum at that point. Then I told us all yesterday that if price action goes on to break out on retest the 143.450, we definitely want to be looking out for buying opportunity, which is exactly what happened here. And in fact, for I think 14 or 15 hours or so, we saw our price action was ranging just right around our entry point at that area. And in fact, at this point in time, if you are taking advantage of that buy position, you will currently be running with about 24-25 pips in profit at this point. And you know how we do it here. When price action moves significantly well in our favor, the next thing we want to be doing is to move our stop losses to secure the current buy position. And from the looks of things right now, I will be advising us to move all stop losses to areas just right above or around our entry zone at the 143.450 so that we can give room for price action to breathe. So with our positions well secured at this point, what is going to be our plans as we get prepared for the New York session today? Well, one of the things we are going to be using to guide our trading activity for today is this trend line that you can see on your screen. Now, considering what has been going on since the beginning of this week, we can see that this is the lowest point price action has been for this week. And around that area, we saw sharp rejections giving us multiple armor candles, which is a sign that buyers' presence can be seen around that area. Then following this lowest point here, we saw another higher low here during the early hours of today to give us a vehicle that might likely drive a bullish momentum for this week. So with the situation we have here, price action staying right above our trend line, we have no other choice than to continue to look out for buying opportunities. So as the situation goes on like this, we will be looking out for more opportunities above the structure to maximize this bullish momentum that we are already in. Now, how do we intend to maximize this bullish move, especially for those who had missed out on this initial buy position we took at the 143.450? Now, zooming into the structure here, remember during our live session yesterday, we acknowledged our key level for the week sitting along the 143.900 area, where we begin to see selling pressure resume around this level on Friday of last week's trading session. And in fact, if price action does break out of that level today, I'm of the opinion that we might be in for another massive bullish move for the later part of the week. So with the situation we have here, following this ascending trend line we have on this chart, we are likely going to be seeing price break out of the 143.900 level. So for those who already have a buy position at this point, so you're already in profit, so you can afford to test waters around the 143.900 by placing a buy stop order there so that you can capture that move all the way to the upside. So we already have a profit running right now, so we can still risk something there. But for those who had missed out on this opportunity, then I will be advising you to wait for a retest of structure giving us confirmations before joining that trend continuation to the upside. And mind you, if price drops to the downside, we don't want to be scared or worried, as we still have price remaining above our bullish trend line. So it could still come into the structure where it also shares a confluence with that resistant line for the week at the 143.750 and continue by pressure above that area and along the trend line, of course, will be another opportunity to be part of the trend continuation to the upside. So for today, it's a simple setup we have here. As long as price remain above this trend line that we have here, we feel comfortable in our buy position, and of course, look out for more opportunities to maximize this move. However, in as much as we're looking out for buying opportunity here, we cannot ignore the potentials the sellers also have from this current structure. And if we consider the fact that we saw selling pressure around that key level during the last trading day of last week, and followed by another continued selling pressure around this area, there is a high chance that sellers could come in at any point in time. And if I want to be selling at this juncture on the market, I would rather want to see price action take out this trend line, break down the trend line, and in fact retest it for confirmation before I want to be opening a sell position. So I want to see something like this: breakdown, retest of structure, continued selling pressure, revealing that buyers are finding it difficult to climb back above the trend line. Then at this point, I want to be considering selling the USDJPY, while we also have structures like the 143.250 and the 142.850. If broken to the downside, we'll be welcoming more opportunities to maximize the potential of this bearish move. So this is how we are going to be trading the USDJPY for today. So I hope we are well equipped to be able to take advantage of trading opportunities for today, as we were able to simulate all the potential opportunities that are likely going to be happening on all of the instruments on our watch list for this week. So far so good today. We were able to trade the US Oil, the USTech100, the GBPUSD, the XAUUSD, and of course the USDJPY. So it's on this note I want to wish you guys best of luck during the New York session today. And for those who are joining us for the first time, I hope you are able to gain one or two things from what we discussed today. And trust me, with time you get to understand how this works, and you will be able to eventually use the information you have gathered here to make your independent decision on your account. So I implore you to join us tomorrow again. It's 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this instrument has been doing so far, and at the same time get ready for the New York session tomorrow. So I wish you best of luck today, and please remember that we have high impact events coming up in about an hour or two from now. So you want to ensure that any positions that you have running in profit, whatever it is at this point, needs to be well secured. Move your stop losses accordingly, lock in the profit, and let's wait out and see how the market is going to be anticipating and reacting to the US economic features coming up in about an hour or so. So I wish you best of luck today. Do have a wonderful evening, and I look forward to seeing you same time tomorrow. Bye-bye.